In this video, we're going to talk about the 12 best dividend REITs for long-term investors to buy now. So before we start, please like this video and subscribe to our channel for weekly updates. Let's get started. When pondering the asset class that offers the highest yield, real estate investment trusts, or REITs, frequently come to mind. REIT dividends averaged about 3.4% in August, according to REIT data, which is more than twice as much as the yield on the S&P 500. And it's these generous yields that make REIT dividends especially attractive to income investors, especially during times of high inflation. While recent releases of the Consumer Price Index, CPI, showed moderating inflation, it will take a while to bring prices down, creating challenges for those living on a fixed income, who have few options available for offsetting steadily rising costs. But one option they have is to target REIT dividends. In addition to generous yields, REITs have a built-in cushion to hedge against inflation and limit downside risk. REITs tend to have embedded escalators in their leases that cause rents to rise annually. And many firms will link rent increases with the CPI, making REITs ideal investments during times of higher inflation. While investors will often seek out the best REITs to buy based on their rich yields, they may often overlook a firm's ability to deliver exceptional dividend growth. BCA Research forecast REIT dividends rising by 10% on average in 2022, versus 7.1% for the broader S&P 500. They expect this trend to continue in 2023 and beyond. With REIT dividends, investors can increase their income, which makes the yield-friendly sector even more appealing, especially when inflation is high. Because REITs are required to distribute at least 90% of their income as dividends to their shareholders, REITs are very appealing because some of them offer yields of 10% or higher. Let's go over our list of the 12 best dividend REITs for long-term investors that you might want to consider adding to your portfolio. Number 12. CubeSmart, ticker, CUBE. CubeSmart is among the top 3 self-storage REITs in the US, owning and/or managing nearly 1,300 properties. This REIT expanded its portfolio in high-growth Western markets that include Southern California, Phoenix, Houston and Las Vegas last December via the $1.7 billion acquisition of Storage West, which owned 59 facilities. Cube put in a strong showing in the third quarter of 2022, boasting a same-store occupancy rate of 95% and generating 19% same-store net operating income gains. The REIT's 12.7% rental revenue growth reflects acquisitions, new development and new stores added to the company's profitable third-party management platform. Income investors eyeing REIT dividends will want to give CubeSmart a closer look. The company has an 11-year track record of dividend growth, including 10% average annual hikes over 5 years. In May of 2022, Raymond James analyst Jonathan Hughes lifted his rating on Cube to a strong buy, due to an attractive risk-reward setup, as well as the recession-resistant nature of its business. Number 11. Equinix, ticker, EQIX. Equinix is a global digital REIT that operates 248 data centers across 31 countries and serves over 10,000 customers. Following an intense round of buyouts by equity firms last year, Equinix and rival Digital Realty Trust are the market's only remaining pure-play digital REITs. Equinix serves over 3,000 cloud and IT service provider customers, including leading hyperscale cloud providers like Alphabet, Microsoft, Zoom Video Communications, and Oracle. Approximately 95% of the REIT's revenues are recurring and 90% of its bookings are from existing customers, providing a highly predictable income stream. The company has been adding approximately 200 to 300 new customers per quarter and has held its churn rate to around 2%. Equinix's growth initiatives are supported by a BBB+ rated balance sheet showing $5.8 billion of available liquidity. And so far so good. The REIT has recorded 78 consecutive quarters of revenue growth, which is the longest track record of any S&P 500 company. The company's track record for dividend growth is building. The REIT has delivered 6 consecutive years of dividend hikes, including nearly 10% annual increases, on average, over 5 years. Number 10. Generation Income Properties Incorporated, ticker, GIPR. Based in Tampa, Florida, Generation Income Properties is a real estate investment trust that owns and operates high-quality single-tenant properties, leasing to industrial and retail investment-grade customers. Generation Income Properties Incorporated's dividend yield in April 2022 came in at 8.82%. Generation Income Properties declared on April 7 a $0.054 per share monthly dividend, in line with the previous year. In March 2022, Generation Income Properties acquired a leasehold interest in a single-tenant retail chain department store in Tucson, Arizona for approximately $7.3 million. The acquisition was funded with 50% cash and 50% debt. The building is rented out to Kohl's Corporation and the lease generates about $824,000 of annualized gross base rent and an annual net rent of roughly $591,000 after payments are made under the ground lease. Generation Income Properties dividend yield as of April 2022 was 8.82%. Number 9. Dynex Capital Incorporated, ticker, DX. Dynex Capital Incorporated is a Virginia-based mortgage real estate investment trust that invests primarily in mortgage-backed securities that are backed by the United States government or a U.S. government-sponsored entity. Dynex Capital delivers a dividend yield of 10.38% as of April 2022. Dynex Capital's revenue for the period jumped 8.27% year-over-year to $15.61 million, outperforming analyst predictions by $1.36 million. Cash and cash equivalents at the end of December 2021 increased to $366 million from $295.6 million in 2020, indicating the possible continuance of monthly dividend payments. Number 8. Gladstone Land Corporation, ticker, LAND. Gladstone Land Corporation is a Virginia-based real estate investment trust that owns and operates a portfolio of farmland and farm-related properties based in significant American agricultural markets. These properties are leased to unrelated third-party farmers. As of August 2022, Gladstone Land Corporation owned 169 farms comprised of over 115,000 total acres across 15 states in the U.S. Gladstone Land's revenue trended up 28% each year over the past 3 years. That's well above most pre-profit companies. While the compound gain of 19% per year over 3 years is pretty good, you might argue it doesn't fully reflect the strong revenue growth. So now might be the perfect time to put Gladstone Land on your radar. If the company is trending toward profitability, then that could be very interesting. Gladstone Land Corporation's dividend yield as of April 2022 was 1.39%. Number 7. LTC Properties Incorporated, ticker, LTC. LTC Properties is a real estate investment trust or REIT based in Westlake Village, California, that invests in senior housing and healthcare properties across the United States. The company offers sale-leasebacks, mortgage financing, joint ventures, construction financing, and structured finance solutions, including preferred equity, bridge, mezzanine lending. The aging of the 80-plus population, which is expected to grow 22% between 2022 and 2027, is a driver of LTC Properties' growth. LTC Properties, as a medium-sized company in the industry, stands to benefit from the 80-plus population, which is the core demographic of healthcare real estate investment trusts. LTC Properties has developed a strong focus on the assisted living and skilled nursing sectors of the healthcare market, accounting for roughly half of total gross investments. As of June 30, 2022, the trust had 202 properties leased to operators. As long as the market shows little regard for value, investors who like monthly dividend payouts may want to consider LTC Properties stock. LTC Properties declared in April 2022 a 19 cents per share monthly dividend. LTC Properties dividend yield as of April 2022 was 6.31%. Number 6. Whitestone, NYSE, WSR. Whitestone REIT is a Texas-based real estate investment trust that owns, acquires, and manages neighborhood shopping centers primarily in affluent markets across the Sunbelt. The REIT has consistently paid dividends for over 15 years. In February 2022, Whitestone REIT declared a 4 cents per share monthly dividend, an 11.6% increase from its earlier dividend of $0.0358. Whitestone REIT's full-year revenue for 2021 came in at $126.1 million, compared to $119 million in the last year. Net income in 2021 stood at $12 million, a 100% increase from the 2020 net income of $6 million. Whitestone REIT dividend yield as of April 22, 3.68%. Number 5. Chatham Lodging Trust, ticker, CLDT. Chatham Lodging Trust manages nearly 40 premium brand hotels, including brands such as Hilton Garden Inn, Hyatt Place, and Residence Inn, across 15 U.S. states. Chatham looks to take advantage of properties where demand currently outpaces supply, paying particularly close attention to those that might be undercapitalized. Chatham does more than just own hotels. It also takes an active management approach by rebranding, revitalizing, or redeveloping properties that add value for both the hotel and shareholders. Number 4. EPR Properties, ticker, EPR. EPR Properties specializes in education and entertainment related venues, such as charter schools, movie theaters, water parks, ski resorts and golf courses. EPR focuses on what it calls its 5-star investment criteria, which looks at value, opportunity, execution, economics and position. To summarize, EPR looks for properties with a sustained competitive advantage, that can obtain a market-dominant position and can deliver an immediate return on investment. EPR switched from a quarterly payment schedule to a monthly one in 2013 and has continued to do so ever since. Number 3. LTC Properties Incorporated, ticker, LTC. LTC Properties manages more than 200 different healthcare facilities focused on senior care. These include skilled nursing centers, assisted living communities and memory care facilities. According to its most recent quarterly report, LTC looks for 5 characteristics in a potential property: strong cash flows that produce an annual yield of 7 to 9%, experienced operators, defendable market positions, quality building structures and a favorable regulatory environment. Since its launch in 1992, LTC has had a presence in over half the country and continues to expand. Number 2. Stag Industrial, NYSE, STAG. Stag Industrial is a REIT focused on single-tenant industrial properties, such as warehouses, distribution centers, manufacturing facilities and office buildings. Stag typically focuses on cheap, out-of-favor properties that it can improve upon to drive up lease values. By targeting this type of property, Stag is heavily dependent upon the success of the industrial retail and manufacturing spaces. According to the company, there is a significant opportunity to improve its market position in this space, given the low individual correlation of such assets, relatively lower capex requirement and the low average investment size that improves acquisition potential. Stag is another REIT that switched from a quarterly to a monthly payment in 2013. Number 1. Realty Income Corporation, ticker, O. Realty Income Corporation offers long-term lease agreements to commercial clients in the United States. It is an S&P 500 company that has increased its dividends 115 times since it was publicly listed in 1994. Realty Income Corporation's yield on April 2022 stood at 3.99%. Wolfe Research analyst Andrew Rosavach upgraded Realty Income Corporation to outperform from peer perform on March 15. In April, Realty Income Corporation declared a $0.247 per share monthly dividend. The dividend was distributed to shareholders of the company as in May. Realty Income Corporation's dividend yield as of April 2022 was 3.99%. REITs can be excellent for producing higher yields, but they also frequently exhibit high economic sensitivity. During the financial crisis, REIT values plummeted due to a rise in defaults, a decline in income, and vacant properties. Interest rate sensitivity also applies to REITs. Although REIT prices and interest rates typically move in opposite directions, different sectors have different reactions. REITs have historically provided investors dividend-based income, competitive market performance, transparency, liquidity, inflation protection and portfolio diversification. REITs give investors the advantages of both buying publicly traded stock and investing in commercial real estate. Which of these long-term dividend REITs do you think are good buys for your investment portfolio? Let us know in the comment box below. And don't forget to like this video and subscribe to this channel for weekly updates on the best stocks to buy and cutting-edge investment strategies. Happy investing and thank you for watching.